Hey, everybody, it is now week 5 of our podcast. Welcome back to your listeners. Uh, our listeners, actually, not yours, but our listeners. We're gonna start this week off with our usual 360
Hamster.
Bamster 360. All right, and then we're going to our
Alright.
segments. So get ready for week 5 of excitement.
All right, I'm gonna start the clock. Ready, guys? You got
Yeah.
10 seconds.
Ready.
9, 8. I'm not counting down. All right.
All right, we're gonna start off with Matthews, and then we'll go to Blue Moon, and then come to me.
All right. I like that nickname for Adam. Well, Vice News is trying to seek a buyer, and sources have leaked. Valuation issues are the problem with medias, and I'm curious to see what happens. That has a lot of potential ramification for other digital media.
Adam.
So I would say rich affluent people, they love that shit. Look at Bezos in Washington Post.
Yeah, yeah.
E, go ahead.
I think Bezos is gonna take Vice. It's perfect to his thing. Or I think Elon has a good opportunity for Vice too, because he likes free speech. So why not?
All right, B.
All right, Adam. What's your topic for the week?
My topic, BOE chief sees apocalyptic risk from soaring food prices. That was beyond expected. So it's funny that the Bank of England is finally catching up. B.
Wow, that's very interesting to me. That's my news I never heard this week. So my thoughts is finally they're finally catching up, and they are not gonna hoard all the foods. Matthews.
Quite interesting because I have really paid attention to the news from across the pond. I think the sentiment will be the same here, just in short order, and we'll see the same news in the States.
Cool. All right, so now I will give my topic. My topic is the SEC chair, Gensler, doubles down on regulating crypto as a security. So essentially, what the article mentions is that they're now evaluating to see should cryptocurrency be a commodity or security. Thoughts, Matthews?
Neither. It's just a fad.
Wow.
Burn.
I say it's a commodity because it does have value. Whether if it's not real asset, like it does have value. Go ahead, B.
I feel like it could be both. I feel like maybe the SEC needs to kind of combine both of those kind of the ideology of it, because it does have both properties from commodity and in a security. If you go through the fiat side of things or the blockchain things, it'll be a commodity. So that's my thoughts on that. Matthews, we have 2 minutes left. Is your next?
This news is slightly older, but it is very ripe for the news we heard a week or two ago, which is, excuse me, my mouse doesn't move. UFC, Formula One, and WWE could be the next acquisition targets for streaming giants, supposedly, because Disney tried to incorporate WWE into a streaming service, and now they have seen the valuation for that has gone up since 2016. They were trying to buy for 0.2 billion, and now they're trying to buy licensing fees for 4 years, $150 million each. So they could have gotten it on the cheaper side, but they delayed it because it affected their image. Now, a lot of other streaming giants such as Amazon Plus, Amazon Video, and Netflix and others are trying to buy those entertainment divisions. Any thoughts on that?
Adam?
That was way too long, Matthews.
I know. I couldn't summarize. It's just too
my
long.
thoughts is that WWE is very profitable.
Mhm.
They just need an expansion model, especially towards Asia. But I'm hearing they're doing a good job. B.
I think on the expansion part, Adam, they do have a small market of talent there. They do also have a lot of talent in Europe, which they're trying to expand. Um, but on the aspect of kind of getting acquired, it's a good requirement
1 minute.
because
Mhm.
Vince McMahon, the man, CEO of that place, it's getting old, so he needs to pass it on. So who's he going to pass it on to? Is it going to be corporate, or is it going to be his son-in-law or his son? So, Adam, last topic for us. We're
All
running.
right. 40 seconds. Man pleads guilty to misusing pandemic relief business loan. That's it. Essentially, that's hilarious. That's all I gotta say. It's hilarious. B, go ahead.
This is why the BP loan was a failure. Whoever wrote it, yeah, this is one of the reasons why it was bad.
Is it just one person who's pleading guilty?
That's
Because there
one
were,
of many,
oh
man.
my God,
One
that's
of
like,
many. I'll give you
there
another
are
story, but go ahead, Matthew.
millions. Yeah, there are millions
Go ahead.
who
No.
just
It-
raided the coffers for that.
Oh
That's a-
man.
yeah.
Nice.
Man, now that's our 360 banter of the week. All right. So my first topic of the week was in the chat. There's no relief in sight for high gas prices. So in summary, what incomplacency of this issue is that economists are seeing that potentially gas prices can go up to $5. Reasons why is because the conditions that China has right now, because they're shut down, they're not using much of the resources. So, but once they come up from shutdown, that can spike the prices. One, and also the U.S. does not have the power to kind of control the price of the gas prices compared to Russia, because Russia has other ventures out there that they can open the markets to. So for example, the Asian markets, which is kind of happening right now. So thoughts on that, Matthews?
China shutting down at least a section of their country has been helpful to us in keeping the prices down. It could have been way, way higher for us at this point if they're still open. But it is it's a little problematic that the U.S. still relies on the global commodities markets whims when it comes to its domestic economy's performance, because oil or energy is a huge input cost on everything, and input a good that can impact the input cost for every good and service. And I actually have another additional topic I'll bring up about this in just a bit, but it is a little saddening that we're still at the whims of what happens on the global commodities markets.
Adam?
I don't like how they average stuff out, is because the one thing that they don't really look at is the fact that Pennsylvania has the highest taxes, as well as California, for gasoline. And so, whereas in Alaska is like the lowest, right? And I think it's the fact that people don't realize is that the U.S. still has the lowest gasoline prices in the world. Pending source, which I'll post later. But yeah, like it is high, but compared to like Philippines or
Or just a year ago.
elsewhere.
Any country that
it's-
has leaders.
Gas in terms of history is relative, but compared to other countries, that's where you kind of want to look at it. So
Yeah, my thoughts on this is that, like adding upon to Adam's point, we charge by the gallon, and other countries charge by the liters. We don't go through the metric system. They do. Those ones are getting charged more because they're $4 to $5 per liter. We're getting 4 of those for a gallon. It's not a big deal to us. We consume more and we pay less. So for us, it's a win for us. And also, I think one of the main reasons why we're seeing this too is because the OPEC regions, they are benefiting this the most. They're having hundreds of $1 million of profits compared to other years. So they're not producing any more oil, which is not helping the situation, right? Basic supply chain economic tendencies here. When your gas prices are up, why put more in the market? Just keep it up. So that's my thoughts there. Matthews, what's your thoughts of the week for your next topic?
Oh, well, consumer credit card debt and annual percentage rates rates are increasing, and consumer credit card debt reached. Well, this article is from CNBC, and consumer credit card debt and APR rates are heading to an all-time high, and APR rates are actually expected to reach, I believe, 18% now, or yeah, 18% by the end of the year. And consumer credit card debt is has reached, when you annualize it, about $840 billion. I personally think this is a bellwether as to the amount of cash people have in their coffers to spend, and the kind of crisis we're walking into as we reach recession level in the next coming couple of quarters. What do you guys think?
Adam?
The APR depends on the credit card company, and I can't really speak too much in terms of like my positions, but all I gotta say is that look at your credit card statements in terms of it's a variable interest rate, so it follows really well with the federal funds rate. And if you look at the article link below, they did a really nice graph against the credit card rates and the federal funds rate and how it kind of mimics it. But the issue is really the underlying issue is really consumers' approach to consumption. That's pretty much it, and their ability to manage debt. And the thing is, once interest rate debts comes in, once interest rates increases, the debt is gonna basically snowball, right? So it's just a business, right?
Mhm. And from my end, I foresaw this as we were going to high inflations. When you're in a high inflation market, you're going to see banks, especially credit card companies, they're going to do really well in this times because interest rates are going to increase. And that means profits going to increase for them. So that's the kind of common economic procedure there. You see, as you see that historically seeing that. One thing to kind of add to this color for your APR range is you can always call your credit card provider and ask them to decrease. They are willing to do that depending on how many times you call for that. Well, so at least call once a year. It ain't gonna be too bad, but once a year. So that's my thoughts. Adam, topic for this week.
Yeah, it's small businesses still struggle to find enough workers. Essentially, there was a Goldman Sachs basically survey of 1,000 businesses, and they're just basically struggling, right? I mean, that's pretty cut and dry. Thoughts?
I think the pandemic has changed the lifestyle for many people. If I don't know if I was supposed to go first, but I'm just going first.
That's fine.
The pandemic has made people rethink what they want to do, and if people are not struggling to meet their immediate needs, at least a significant portion of the population, the working age population, they can choose when to work, who to work for, and where to work from. And I think that has an impact on the amount of labor available for the workforce, and that can definitely drive up the labor cost. It could be a good thing if we have sustainable inflation, but at the same time, we don't know how that's going to play out in the end, whether it's going to end up helping increase the earnings for average worker, or it's just going to be part of the inflation and the wage is just going to stay the same or even decline when you when you take in the inflation. But well, we don't know how that's going to play out. So in the end, is
B?
my thought so far.
Can you kind of deep dive a little more into that article
Yeah.
for us?
Yeah, so it's just basically they're unable to just like compete with the wage, and so it's I was gonna leave my commentary later, but might as well now.
Go
Is
for
that
it.
it's kind of funny because the biggest like pushback against raising the minimum wage is the fact that like oh small businesses can't handle yada 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 uh like a $50 million wage, but in reality like corporations and private businesses, they're like, oh, that's nothing to us, come over here. And I think in all reality, like friction unemployment has always been like a thing, right? Everyone's always either constantly are not satisfied with their job, they're not in their best place, right? But I think this is more of a combination of structural and frictional unemployment, where there's a lot of technological changes and people are getting educated, and then the pandemic kind of had that realization like, I'm not really satisfied with this shit. I want to work from home. Before I thought work from home is the devil, but in reality, I love it. How do I get here? Oh, I need another degree.
I
B.
think there's, go ahead, Pete.
For this topic, thanks for going to deeper levels. I'm really indifferent about this, really. If this really goes back to competition, if it's about a free market, if the small businesses, I'm just going to come off kind of harsh on small businesses, if they can't compete with the big companies, then there's a need that they have to kind of really focus on themselves to really compete with the big markets, for the big employers to support their employees. I know it's a very harsh reality, but that's a free market, and if that's how some folks want the free market to run, that's how it's going to be. So, really indifferent about it.
I think location also plays a big role in this. For instance, you can't work on a minimum wage in San Francisco at the moment. And Vail Resorts had a huge issue with this because none of their workers can afford to live in Vail, but they need a lot of workers to run their ski resorts in many of the locations in Colorado. So that kind of location also plays a major role in how much labor cost is going to be, or how many people you will have at your disposal to choose from if you are a small business in any of those locations.
And also, I think to add upon, as a small business owner, you have to learn how to leverage. Learn how to leverage your debt to kind of give more resources to your company will be another one to do. And now I know it's very risky to do, but that's one thing you should put into business if you want to grow really. So that's the aspect after your first 2 years of your startup, and then what goes from there. You can't sustain a 10 to 50 employee company. You have to grow it to like 100. So you have to speed it up. By speeding it up, you have to leverage risk and debt. So, all right, we're going to topic 4, Matthews.
Well, my latest article that I want to discuss is the rising diesel costs are straining U.S. truckers and shipping operations. The shipping problem doesn't seem to go away at all. It's a theme in our discussion every week, and you can't avoid it if you want to talk about increasing inflation. The shipping inefficiencies that are occurring is a major part of it, and the latest pile-on problem to this issue is the rising diesel costs, because many of the trucks run on diesel fuel, and it has increased about $1.50 in just 2 months per gallon. And that has a huge ramification for any of the consumer goods we all consume, because they all get brought into the inner parts of the country on trucks, and the price has gone up, and the shipping cost has gone along and into a higher prices. And this is having a lot of ramifications even in manufacturing, because the manufacturers need to move their goods with them. And that has a downward effect of employment as the period goes by as well. That's part of my opinion, part the fact that were listed on the article itself. Any thoughts?
Adam?
No opinions. It's pretty straightforward.
Ah, you said it, not me. I really think for this one, it speeds up the process to do what? Automate the semi truck driver ish problem. It would speed up the issue to do that. Like companies like Tesla and Revlent, they're gonna speed up the process to have very non-diesel semi truck powered trucks.
Do
So
you
I
mean
feel like
electric
yeah, electric.
truck?
Yep. It
Okay.
speeds up the demand for that solution. So all these semi truckers who are earning a lot from this, be really aware this is happening. This is speeding up that process, because businesses are seeing that problem and it's escalating the issue, and they need to resolve it. In one way, how to resolve that is to have the solution come to life.
I completely
and
agree.
and
Go
to
ahead.
to clarify with B's point, it's more like the efficiency of the vehicle. They're still far away from self-driving trucks. So,
Yeah.
but still, still trained for other stuff too. That's like,
Mhm.
Yeah, but in the medium term, this is maybe this is not the platform for it, but this is politically very difficult selling points, because consumers are feeling the increased higher prices from this. That's a side point anyway.
Oh, really? Are you sure
I
about
mean,
that?
well,
Oh.
Do you want to go into it?
We're not a
I-
political platform, so I'll pass.
Thank you for that. And just to remind our viewers there, we're all about business.
Yes.
All right.
Yes.
So,
So yeah.
kind
So
of
yeah, I think that will bring us to the next segue of our closing thoughts. I'll start this off. This week we got really hot with the crypto debate. Maybe next week you might see us. So please help us and subscribe for our next challenge. Matthews?
I read this week that the buy now, pay later scheme that a lot of stores and pretty much every business out there seems to use is not a boom, it's a bubble, and it could burst at any given moment, but it's a rising bubble. I think that's a bellwether as to where our economy is, and I think it's indicative. But I don't know how big of a bubble it is, but it is a bubble. Harvard research says, and I'm eager to see where that goes. For the average consumer, it's not really good news, but for people who have cash and sitting on cash and are looking to invest, as soon as the economy tanks, it's probably an indicator as to when to jump in. Is my last thought.
We could talk about it more next week too. So hey, subscribe
Yeah.
to us next week. Adam?
So I'm gonna try to do the theme where my name is where my thoughts are of the week. And if you notice, it's to the blue moon, and it's usually associated with crypto and all these story stocks. So I'm not a
And
big
look at
fan
his
of
hand.
those.
And look at his hand. Raise it up. The other hand. There we go. Blue moon.
Hey, sponsor us. I'm just kidding. Maybe.
Come on.
But in reality, like I do like a lot of these motivated trades and a lot of retail investors participating, because the one thing that we truly cannot avoid is the rising inequality, and stuff like this is what motivates me. Try to bridge the gap between the finance world and, you know, everyday Main Street. So thanks everybody.
Awesome,
Give me-
everybody.
yeah.
So
Gi-
this is
give
a
us some
week for week
topics.
5. So we're gonna come. If you can comment on in the comments below, we will attack your question or your topic, and we'll prep for you for next week 6. So be prepared for that. So, well, this is it for us from BAM, from our band banter. So B, facing out over here. Adam to the blue moon. And Matthews,
Subscribe.
stay you, man. Stay you. Stay you. We want some more Wall Street papers. This week was kind of different. You need more.
Okay. All right, folks. Subscribe.
All right, bye, everybody.
Bye.
Bye.